Hi everyone, welcome to A1 POA, your guide to mastering accounting concepts. For today, we'll be covering the Introductions to Accounting, Part 1. Let's go! In total, we will be learning 3 main learning objectives for today. Introductions to Business, Purpose of Accounting, Financial Statement, and last but not least, Role of Accounting and Accountants. So we have over here, introductions to business, what business is all about, the purpose of accounting as far as business is concerned, and the role of accountants in this whole entire business. For every LO, let us now break down into the respective part. For the first one, 1.1, the sub-LO, understand what a business is. And of course, when you understand what a business is, you will want to know what is its purpose. Next, we talk about identifying types of businesses and their role in the economy. So we understand that there's different type of businesses in the business environment, and more importantly is that what roles do they play, what important roles do they play in the economy, especially in our specific context, Singapore economy. So their role over here. Next, we talk about purpose of accounting in the context of explaining the purpose and why it is so important as far as accounting is concerned in the context of business environment. Next, we talk about understanding how financial statements support the decision making. Next, we talk about identifying the user of accounting information and their needs. So once we identify who are the user, we want to understand what are their needs. Next, we come into the context of describing the function and responsibility of accountants. So what do accountants do, and therefore what are the responsibility of these accountants? Last but not least, we talk about understand how accountants support the business operations. From this point onwards, we must view accountants as business partner of the specific organization that he or she is working. So how do they support business operation? And more importantly is the ethical consideration, the ethical practice that accountants should adopt. So with that in mind, let's go. Business. Let us now compartmentalize this definition. A business is an organization. So we understand that a business is an organization. Now typically for organization, right? Organization, there is primarily 2 types of organizations. We have the profit organization, and we also have the non-profit organization. The non-profit organization, the name itself would have tell you that these are the organizations that exist for the purpose of fulfilling other mission or other objective, right? Their primary purpose is not about generating profit. But whereas over here, our context, a business refer to a profit organization. Because as you can see over here, when we further elaborate the definition, it says that it engaged in activity to provide goods and services to customers with the aim of earning a profit. So therefore, business is an organization with the aim of earning a profit over here. Within the definition, we also mention the keyword, which is goods and services. So we understand from the layman perspective that there's always a buyer and a seller. Buyer and a seller. The seller will deliver the goods and services to the buyer, and therefore the buyer will then pay the seller because the buyer would have consumed the goods and the services. He or she would have been benefited from the goods and services provided by the seller, and therefore as a result of that, he or she have to pay to the seller in monetary terms. Yep. So with that, this definition gives all of us a good snapshot in terms of what a business is all about. It exists for the purpose of profit, and it provides goods and services so that it will be paid. With that, let us now go to the next slide that talk about the purpose of business. So once again, business is an organization that generate profit based on the previous slide, and therefore it earns profit. Recall back in the earlier slide, we talked about the buyer and the seller. So when the seller sell the goods and the services to the buyer, this is where the buyer would have benefit, because he would have received the title of the goods and benefit from the goods and services. So therefore, profit is the financial reward for taking the risk of running a business. The reward will be in the form of payment by the buyer to the seller, right? So with that, of course, you will want to earn a profit. You will want to make sure that your selling price is more than your cost of the business. So to satisfy customer needs and want over here, that's another purpose. Customer will only buy from you when the customer perceive that their needs and wants are being satisfied. And once they have decided that you are able to help them to satisfy their needs and wants, then they will buy from you, right? So for you to even provide the goods and services to your potential customer or to the buyer, you have to make sure that your goods and services are relevant to them, are appealing to them, right? Now, with all this in mind, we talk about the first purpose, and we also talk about the second purpose. You will need a team to help you to get the goods and services ready before you are able to deliver to them. And therefore, you need to hire people, right? You need to hire staff. You need to hire the team, the capable team, to be able to help you to get the goods and services ready, to push out the goods and services to the awareness of all these potential buyers, customer, before they decide whether or not to buy from you. So because of that, your business or your profit organizations create jobs for all these workers, right? Or the staff. And with all this in mind, when we look at objective or purpose 1, 2, 3, all this will help to contribute to a bigger intent, right? And therefore to contribute to the economy of Singapore. How can this be done? The contribution will be done via payment of tax, because we will assume the business earn profit, because no business will want to exist for the purpose of making losses year after year. That's just not possible. So we assume that business earns profit, and therefore business pay tax to the government, and because of that, the country as a whole, the economy prosper. And therefore, with all these goods and services that your business provide, you actually helps to contribute in terms of raising a country overall standard of living. So that's the purpose of business. The next slide, we talk about the types of business. To reinforce from the previous slide, we mentioned that the types of business is goods and services. Remember, which one comes first? Goods come first or services come first? The answer is goods comes first, followed by services. So goods come first before services fall in place. The whole entire economy of the country, or even the global economy, are all driven by goods. People need to buy goods for whatever reason, right? To fulfill or satisfy their needs and want. And with all these goods, you will need to have businesses. You need to have profit organizations that helps to provide services to complement the goods to make sure that this good will be able to deliver smoothly to the doorstep of the consumer. So, what is the description or the definition of goods? In short, these are the physical products that can be seen and can be touched. Example, we have furniture, we have food, phone, whatever tangible items that can be touched, whatever items of a 3-dimension that can be felt and can be touched. These are considered as goods. We thereafter talk about services, whereby we say that it is because of the existence of goods, you would have establishments of business that provide services to reinforce the goods in terms of ensuring that all these goods arrive on time in front of the doorstep of the buyer in that sense. And therefore, services itself, they are non-physical. You can't feel it in terms of the 3-dimension effect. So, for example, banking, transport, education. You go to school every single day, Monday to Friday, you take public transport. You probably pay your friends for the meal, for the lunch that he helped you to pay on behalf first. You do a pay now or pay la to your friend. So these are considered as banking services. You don't bring home with you the services, right? Because you can't feel it. Education, right? Sec 3, you progress from Sec 2 to Sec 3, education. All these are services being provided to you. So with that, these are the types of services. Now we come to business activity. Remember, we mentioned earlier that a business is a profit organization. And because of that, these profit organizations, in order to ensure that the goods and services are being sold to the customer, to satisfy the needs and wants of the customer, we need to understand what are the 3 main activities that take place in the organization. So when you look at 1, 2, 3, let us now arrange all this into the proper order. You wouldn't have finance if you don't have the goods itself. So in order to have the goods, it's either you buy or you make. When you make, these fall under the category of production. These fall under the category of production. So production, in short, it is all about making goods or providing services, right? You have step 1, step 2, step 3 in order to establish all this process to come up with the final product, which can be a goods or services. Next, the challenges is how to push out all this to the end consumer, how to create awareness to them, right? They wouldn't even know you. They will only know you through your marketing effort, right? So this is where marketing activity comes into the picture, whereby you establish all the sales funnel, the sales channel, so that you'll be able to identify, you'll be able to target your targeted customer. You will know who will be your targeted audience. Who are, of course, the customer who have the higher chance of knowing your product, a higher probability of them getting interest in your goods and services, so that ultimately they will buy and therefore they will be able to satisfy their needs and wants. So last but not least, we have finance. It is only through production and marketing, then you have finance that will come into the picture. We are talking about getting paid, and we are also talking about paying. So finance, obtaining and using funds effectively. When we talk about effectively in the context of finance, we are saying that to utilize the financial resources by doing the right thing. And in order to do the right thing, this is where at the subsequent slide we will teach the class how do we go about doing the right things using what kind of tools. Just bear in mind, right? Using what types of tools. Later we will revisit this term. So in short, production, marketing, finance are the 3 primary activities in a business. Now we come to the next slide. The next slide, we talk about the types of business organization. Think about it. Which of the business organization, which types your parents work for, or probably they run a business, which types of the business organizations your parents is working or are working for. Think about it. Generally, by and large, we have three. The most common would be company. You always hear different people, sometimes they share with you, oh, this company is doing well, that company is not doing so well. Maybe during Chinese New Year or during festive season like Hari Raya, you overheard the adult talking, right? Sometimes they will be talking about, oh, the economy is not so good, or the economies are good, and then therefore the company is paying good bonus, so on and so forth. So most of the adult, they work in company, they work in business organization that classified to be company. Of course, we also have partnership. Last but not least, we have sole proprietorship. So now let us zoom in and understand every individual type. What are the main characteristics that classify them, or in a way identifying them to be that type of organization? Sole proprietorship. Sole proprietorship, the word itself, sole, would have tell you that it is a one-man show, one person, one-man show. Next, we talk about key feature. The key feature, the main characteristic that characterize a sole proprietor is that it is simple to set up. It is simple to set up. The owners keep all the profit. Yeah, because he's the only person, right? And there's unlimited liability. Now, in your context, just bear in mind that unlimited liability implies that when supplier chase for overdue payment, they have the right to get a court order, and they can have the right to take away your valuable personal item. So that's sole proprietorship. Now we talk about sole proprietor. Now we imagine if a few sole proprietor decided to come together, right? They decided to come together. Just imagine a few sole proprietor coming together. They decided to form a partnership. So at least two, right? Two sole proprietors come together because they believe that collaborating together, leveraging one another unique skill set, they will be able to get the business to go up to the next level. So they collaborate with one another. So for partnership, minimally we need to have two, maximum 20. If we have more than 20 person, then there is a need to incorporate a company. So for partnership, they share profit and responsibility, and of course, just like sole proprietorship, they have unlimited liability. For the sharing of the profit, it really boils down to the responsibility. So we have A and B here, partner A and partner B. Assuming that partner A bear more responsibility, and it is because of this arrangement, partner A, upon negotiation, upon written agreement with partner B, maybe, just an example, he will get 60% of the profit, whereas for partner B, he or she will then share the remaining 40%. Earlier on, we say that a partnership, if you have more than 20 person, you will need to register a company. So for a company, we have shareholders. We call them the shareholders. We don't call them the owner. We call them the shareholder as far as company context is concerned. So the main catch over here, the main characteristic that distinct a company as compared to the previous two would be it has this characteristic called separate legal entity. They have limited liability over here. So limited liability implies that when the company went into a state of insolvency, right, whereby they cannot pay the supplier, the creditors, the company director or the shareholder, they will not be sued personally. So just to have a rough idea of which we will build on this concept subsequently as the chapters unfold. Separate legal entity, business and the shareholder. they are separated. Unlike sole proprietor and partnership, of which these two business types, the liability are unlimited. There is no separate legal entity to be distinct between the sole proprietor as well as the partner from the business. So, in a nutshell, as simple as the term convey, they are the business represent them. With that, let us now go into the next slide. At this juncture, we know what are the specific definition of business. We know what are the business type. We know what are the business activity. We even zoom in and understand the business organization. Typically, we have sole proprietorship, partnership, and company. With that in mind, now it is time for us to understand in specific what is the purpose of accounting after all. And then this is where we will come to LO2. Accounting over here, it play a critical or crucial role in the business or in the organization, because first and foremost, it helps to keep track of all financial activity. Remember, there is always this saying, what get measured or get tracked, get the work done. What don't get measures, the work will never be done, right? So it is important to know that keeping track with all the traceability of all the business transaction day in, day out will help the business to make better decision, which we will cover more subsequently. Next, we talk about accounting show whether the business is profitable or not. So when we talk about profitable, of course, everyone want their business to be profitable. But sometimes due to wrong decision at a point of time, due to decision that didn't take off, the business will make losses. No one want red color, right? Everyone want blue color. But the thing is that company do make losses. So if they make losses and if they couldn't reverse the situation and thereafter subsequently they make profit to compensate for the losses, and when that happens, in the long run, the company will be at the verge of closing down. Next, accounting also provide information for decision making and control, as I mentioned earlier on. For who? For different types of stakeholder. In short, business is all about activity, and accounting is about measuring and reporting all this activity. So this big circle, just imagine this is business, and in the big circle itself, right, first and foremost, you have production. As per the earlier slide that we mentioned, you make goods and you get the services ready. Then after that, you have marketing through advertisement effort, through sales funnel, through creation of awareness to the end consumer, potential customer. And then this is where, with that in mind, accounting will kicks in. With that, we come to the next slide. The next slide, we are talking about accounting is the process of identifying, recording, classifying, summarizing, and interpreting financial information to help user to make decision. Wow, that is a long definition. But if you look at this definition of the accounting, right, there's a lot of takeaway for us in terms of stage 1, stage 2, stage 3, stage 4, so on and so forth, in terms of all the stages of processes, right, if I were to put it in that context. So, what will be the first one? The first one is identifying. Accountant always make sure that they identify transactions. So you identify transactions, business transaction, those non-business related transactions we wouldn't even track. So once you identify, you record, and when you record in the system, right? And then once you record into the system, it is important for you to classify. You classify into the different types of account type, so on and so forth. And with all this information, it is important for you to be able to summarize into a report, right? Report. And also, once you summarize into the report, it is important for you to value add to your shareholders, to your boss, that this report meant what, right? Maybe in that specific period. the company is making profit or incur losses, right? So it is important for us to memorize all these different steps. Step number 1, identify. Step number 2, record. Step number 3, classify. Step number 4, summarize. And step number 5, interpret. If you look at all these keywords, right, what we can do is that we can make an acronym, right? We can make an acronym. So we have identified here. We have thereafter we have record, IRC, classified, summarize, and interpreting. IRCSI. So later we will come back and we will test our memory whether we are able to memorize this acronym. Now, very powerful acronym. Once we are able to memorize this, when we subsequently unfold the various LO down the road, this definitely will come in very handy. So once again, IRCSI. Just remember, right? In short, accounting is about turning raw financial data from IRCSI into useful information, right? So on start, you have raw info, and by the time you go through IRCSI, you'll be able to get useful information. With that, let us now go to the next slide. So since we already understand the definition of accounting, let us now look at the purpose of accounting. The purpose of accounting to provide financial information. So you provide financial information whereby you have raw info. You go through IRCSI. You have thereafter useful info. And this useful info will allow your bosses to make informed decision. If they make better decision as compared to the previous round, the probability of the business doing well will be high. And if the business continue to do well, such as making profit month after month, your boss will be likely to award you some bonus payment. Yep. Next, to assess performance and financial position. To assess the performance and the financial position. Last but not least, to ensure accountability and stewardship over business resources. So as a whole, if you look at this slide right over here, you will see that all these are quantifiable action for the accountant to be able to carry out his or her job well. So as a whole, if you look at this slide right, you provide, you assess, and then you ensure, right? So after that, once again, you will then repeat the whole cycle again. You provide financial info. After that, you assess the position of the company, the financial position of the company. And last but not least, you ensure the accountability and stewardship over business resources. And then after that, this whole entire cycle will repeat again. With that, let us now look at the roles of accounting in specific, which will be your LO3. So for LO3, roles of accounting, in total we have 6. If you look at this table, we have the row on the left hand of this table. We have the right, the explanation. For the row, we have all these respective specific role. First and foremost, to provide information for decision making. Yes, we mentioned this. Why there is a need to do so? Because when you provide information on the assumption that it is relevant, it is reliable, you will be able to help the various stakeholders such as the shareholder, the owner, the manager, investor, and even creditors to make informed decisions about the business. And of course, different stakeholders, they would have different area in terms of their thought process on the decision that they want to make. Accreditors wouldn't be bothered about whether your company is venturing into new product or what. They just want to make sure that for all the goods and services that they deliver to you, they get paid, right? In return, they get paid. That's what they want to know. Next, assessing performance and profitability. Very important because, as I mentioned, if a company not making enough profit, the company will probably need to start to retrench employee. And if it continue to incur losses, it would have no choice but to close down. So accounting measures how well the business perform during a period through the income statement. Income statement is also commonly known as the statement of financial performance, which we will touch base subsequently, showing whether operations were efficient and profitable. Now, the keyword itself, efficient and profitable, it is interchangeable. If the operation are not efficient, meaning that people or the crew members, the employee, they don't do things right, subsequently the downstream impact is that the business wouldn't be able to be profitable because the goods and services being delivered to the customer are not up to the bare minimum requirement or the standard as perceived by the customer, and therefore the customer will come back to the company to ask for compensation, right? Next, we have showing financial position. Just a quick introduction. Financial position is your performance in terms of your income statement over time, how your company perform over a certain period of time, year after year, month after month, day after day. So if your company always perform well over time, your asset will be good in terms of the value. Your liability will be lesser in that sense, right? And when your asset is more than your liability, of course, your equity as a whole will be higher. So it represents the asset, liability, and equity at a specific date. At a specific date, it can be at the end of the year, and therefore, it is through the statement of financial position showing what the business owe, that is your asset, and what the business owe, and that will be your liability. Yep. Next, we have ensuring accountability and stewardship. So over here, accounting ensure that those managing the business are held responsible for how resources are used. So the keyword is responsible, such as the department head being responsible for their own department's resources, right? Because we don't want the situations whereby the department head overutilize the resources and affect the company as a whole, affect other departments, so on and so forth. Next, we have facilitating planning and control. Facilitating planning and control. Financial data allows managers to set budget at a company level and department level, monitor result, identifying variances, and making the necessary corrections to keep operations efficient, right? So once again, it is a cycle of reflection. What goes well, what didn't go so well, what can be improved, what are the corrective action, what are the preventive action. So that once you are able to facilitate this and establish this positive ecosystem, your business in the long run will be sustainable. And when the business is sustainable, it will be making profitable dollar and cent, right? You'll be making profitable dollar and cent. And when that always occur, right, which is a good thing, the chances of it incurring losses in the long run will be bare minimum. And with all this in mind, to meet legal and taxation's requirement, the government of the country allow you to run your business. For sure, there is a need to tax the business. In Singapore, the current taxation rate is 70% for the corporate tax for the company. For sole proprietor, for partnership partners, all this will be voiced down to individual income tax rate. Why? Because we mentioned that the individual represent the business represent the business, because there is no separate legal entity. So meeting legal and taxation requirement, this is through proper accounting record. At certain point of times, the authority, they will do random audit check just to make sure that company that they have selected for audit continue to uphold the accounting standard required by the law, so that the authority will know that the calculation by and large in terms of the tax payable are being paid correctly in terms of the amount, and of course to pay on time. So you future accountant, right? For those who are inspired to be an accountant, this is definitely a very rewarding and challenging career. So we talk about career, we talk about accountant's career. So let us now dive in to understand better in terms of the roles of the accountants. You record and you maintain financial data, of which the explanation, right? You record systematically, right? The keyword here is systematically. Record business transactions, of course, in the accounting system, right? In the system, in the ERP system or accounting system. ERP itself, just for your understanding, it stands for Enterprise Resource Planning Systems. So accountants record all these transactions to ensure, to the best of his or her ability, the completeness, right? Because we wouldn't want to under record transactions, because when you do that, the accuracy as a whole will be diluted in terms of the financial position. Next, we talk about the second role. The second role is talking about preparing financial statement explanation. They summarize and report financial performance. Seems very familiar to the acronyms, to the short terms that we established earlier on in the previous slide. So later we will get back on that. So summarize, report the financial performance and position through the income statement and statement of financial position. So once again, we also talk about the fact that income statement is commonly known as statement of financial performance. Next, once you have the financial statements right, the accountants will help to provide analysis and interpretations for the shareholders or the director in specific. So accountants interpret financial result, identify trend, and provide insight to management for decision making. Number 4, advising on financial planning and control. So once you are able to come up with the interpretation, you will be able to thereafter value add to the organizations, to the management team, by advising how can you better improve in terms of the forward planning, such as the financial planning, and also importantly to improve on the internal control as a whole. So they help to set budget, they manage costs, and evaluate financial risks. Now, to be able to ensure that the financial risk is always constantly being mitigated, they will need to establish good internal control. And that is the core responsibility of the accountants. Number 5, ensuring compliances with laws and accounting standard. So when we talk about compliances, accountants ensure that the financial records constantly comply with the Singapore Financial Reporting Standard. The acronym is SFRS. Once again, stand for Singapore Financial Reporting Standards. Next, uphold ethical standard. Accountants are always perceived to be the independent professional business partner of the organizations that act with integrity, objectivity, nothing sort of subjective judgment but objective judgment, and confidentiality to maintain the trust and reliability of financial information. It is only through the accountants helping to ensure that the financial information are reliable and relevant, then the stakeholder will be confident enough to rest assured that whatever decision that they make, the chances of the decision that this stakeholder make will be on the right track, all because of the fact that they trust the accountant. And of course, accountant, we have two types of accountant, right? We have the business accountant. Me, myself, I've been a business accountant, right, for the past 29 years. So we also have the public accountant. The public accountant, we call them the auditor. So these are the independent accountants who are trained. These are the independent accountants who are trained to be able to verify the accuracy, the reasonability, and the fairness of a company financial statement. They will do all the necessary check and balances to check whether the company financial statement are prepared in accordance with the SFRS standard or not. And if not, then they will recommend the rectification. They will recommend how to go about to improve so that in future the financial statement will be more reliable and more relevant. Before we go to the next slide, I just want to share once again the definition of reliability and relevancy. So reliability and relevancy. Let me give you an example of relevancy, right? Relevancy is when you try to record or you actually recorded a non-business transaction, maybe the department outing, you spend your own pocket money to have meals together, go for a movie. all these costs are not business expenses, but you record it into the ERP or accounting system, right? And this is totally irrelevant, right? So reliability, on the other hand, reliability, we talk about the fact that assuming you have a business expenditure that have been incurred, and this amount, this business expenses is 10,000, but you accidentally recorded with a zero missing. And because of that, this information, this recording is not reliable because you understate the values of the business transactions. So with that, we have completed LO3. All in all, we have completed LO1, 2, and 3. With that in mind, let us now test your knowledge with 10 MCQ. These 10 MCQ are being split into the respective LO to test your understanding in terms of your application of your knowledge on LO1, Introduction to Business, LO2, Purpose of Accounting, Financial Statement, and last but not least, LO3, Rules of Accounting and Accountant. Let us now dive into question number 1. Under LO1, the question asks, which statement best defines the aim of a business? So all in all, there's 4 choices. Let us now scrutinize line by line items. Number 1, to engage in activities that provide goods and services with the primary goal of providing employment. Of course, the company or the business, if it want to continue to earn profit, it need to hire people. But again, is that this is not the primary reason. So providing employment, this will not be the reason. Next, we have to engage in activities to promote goods and services to customer with the aim of earning a profit. So there's a plus point over here. Earning a profit seems to fit in terms of the best definition of a business. Let us go to the next 2 questions to see whether there's any better fit. If not, B likely is going to be the correct choice. Let us now take a look at C. C, to classify and summarize financial information for external report. I would say that this is the after, right? The after activity, post-event activity. So post-event activity meaning that when there's a transaction in terms of delivering the goods and services, once that you got to prepare, right? The production mean activity, then after that you have the marketing activity, then subsequently then you talk about the post-transactions activity, which is accounting. So in this instance over here, this is not the main primary aim of a business, and therefore over here, this is not the case. D, to meet legal and taxation requirements set by the governments. Once again, this is post-transactions activity. Only when you incur all the transactions over time, over a period of 1 year, you prepare the financial statements, whether you are incurring losses, making profit, this is where you do the necessary tax computations. The government will require the company or the business to pay tax. Again, is that this is after, right? So all in all, C and D is after the transaction happened. So it will not define the aim of a business in terms of the best fit statement, and therefore it is because of that the answer will be B over here. So answer will be B. To engage in activity to provide goods and services to customers with the aim of earning a profit. Next, we go to question 2, still under LO1. For question 2, over here, it says that which set of items accurately represent business that provide services. So, number 1, A. These are the things that you can feel. These are the 3 dimension. These are the items that you can feel. So it is not considered to be service because furniture, you can feel it. It's tangible item. Food, likewise for phone, right? All this you can feel it. So it is not services. Banking, transport, education, this one seems to be the best fit. So let us now take this is services, education for sure is services, transportation likewise is services, banking likewise is services, right? You pay for all this, but you don't bring home with them at the end of the day, because these are something that you cannot bring back home, right? Because it is not tangible at the first place. Now we talk about the last two options, just to make sure that we are able to confirm with confidence that B will be the correct answer. Let us look at C. So proprietorship, partnership, or no, this is more like a business type, right? Business type, you have sole proprietorship, partnership, you have company. So again, is that this is not the answer to the question. D, production, marketing, finance. Once again, as I mentioned, these are business activity. They are not business in the context of providing services. So answer will be B. B will be the answer. Okay. Next we comes to question 3. Question 3, still under LO1. Which characteristic is unique to a company compared to a sole proprietorship or partnership? So over here, it keeps all profits for the owner. Is that the case? It keeps all profit for the owner. Sole proprietorship, yes, because it's a one-man show. It is a one person. Partnership, you have a few partners coming together. Every partner based on the agreement in terms of the proportion of the profit percentage to be split. Yes, that one we can understand, right? So A in this instance seems to be the wrong option. B, it involves more complex regulations as far as the company is concerned, right? Because it need to pay tax, it need to ensure that it do proper books of accounts for the intention of compliances with all those tax filing, all those annual return requirement, and therefore it involves more complex regulations. So B seems to be the correct answer, but let us confirm by looking at C and D. C, it is owned by 2 to 20 people. No, this is the characteristic of partnership. Let us now look at D. D, it is simple to set up. Relatively compared to sole proprietorship or partnership company is for sure, it is harder to set up. And therefore, the answer will be B. Answer will be B. Let us now go to the next question. We are now transiting from LO1 to LO2 as far as the MCQ question are concerned. So for LO4, accounting is the process of identifying, recording, classifying, summarizing, and interpreting financial information. So we have I, right? We have R, we have C, we have S, and we have I. Yep. What is the ultimate goals of this entire process? To keep track of all non-financial business activity. This is no go, right? Because as we mentioned, you have a cohesion outing with your department. That is not official. That is not financial transaction. So therefore, A is wrong. B, to replace the needs for management to evaluate risk. Once again, to replace the need for management to evaluate risk. Once again, this is definitely not the case. This is out of the boundary. The whole entire process, at any point of time, it didn't give any clear evidence that it is meant to replace the requirement, the need for the management to evaluate any risk, right? So B is not the answer. C, to help user make decision, seems to be the case, right? Because we have to help user make informed decision. So let us look at D. D, to ensure compliances with law only. No, right? Of course, you need to comply with the law subsequently. But again, is that what is the ultimate goal as far as this question is concerned? The answer will be C. The ultimate goal is to help user to make decision, because as I mentioned earlier in the previous slide, the user, the stakeholder, usually they trust accountant because they know that accountant are of ethical values in terms of standing on a moral high ground to be able to make the right decision objectively. And therefore, answer is C. Let us now take a look at question number 5. Question number 5 still under LO2. Question is follow. What statement best summarize the relationship between business activity and accounting? So in this instance over here, one glance seems to be like every options sounds right, look right, but again is that we need to zoom into the details in order to be able to pick up the correct option. A talk about business is about activity. Accounting is about measuring and reporting those activities. So in this instance, it says that business is the overall boundary. Accounting is a subset of this overall boundary, right? Whereby it helps to measure and report this activity of the business as a whole. So A seems to be the correct answer. Let us confirm by looking at B, C, and D. So in this instance over here, B, accounting is about activity, business is about measuring and reporting those activities. So this is wrong because this one, it says that accounting is outside the entire boundary and business is inside. So B is wrong. C, the role of accounting is to create fund. The role of business activity is to use them. Again, is that it is never the best summary, right? Here, we didn't really interlink the relationship between both accounting and business activity. It never tells us which one is the bigger boundary, which one is a subset of the bigger boundary. And therefore, because of that, C is not the option. D, we talk about accounting is a non-physical act provided to customer for a fee. No, definitely not the case. Accountant don't charge the customer for the fee that it add, right? Accountant who provide the accounting services, he or she provide to the company, not to customer. And therefore, D is also wrong. So when you look at it, A is the correct answer. A is the correct answer because for A, we say that the boundaries is about the business and A is a subset of the boundary, which is the business. So A is the correct answer. Now we will go to the next question, question 6, LO3, and we will transit from LO2 to LO3. This question asks, the primary role of an accountant is to, number 1, sell company products. No, accountant don't do that. That belongs to the sales and marketing team, right? So A is totally out. B, record and interpret financial information seems to be the case, right? But let us confirm with D and C. C, supervise worker. Accountant don't supervise the worker, right? It is the supervisor, probably the productions department supervise to supervise the production worker. And therefore, C is also not correct. D, make company policy. Make company policy. Accountants are involved, right, in terms of the financial policy, establishing robust and sustainable internal control. But accountant, they don't make company policy per se, right? They assist, and therefore D is wrong. With that in mind, we are confident that B is the correct answer. Record, interpret financial information. So answer is B. Next, we come to question number 7. Question number 7 asks, which of the following is not a responsibility of an accountant? Remember, the question is asking, not a responsibility of an accountant. So over here, we have preparing financial statement. Yes, this is the responsibility. So therefore, this is the options to be eliminated, right? Next, B. Ensuring compliances with accounting standard. Yes, it is a responsibility of an accountant, and answering to this question, this option is out. C, providing advice based on financial data. Yes, accountant do that, right? So therefore, this is out as well. With that in mind, managing marketing campaign is the answer. because accountant don't manage the marketing campaign. It is in charge by the sales and marketing department. Next, we come to question 8 under LO3. Question 8 under LO3. So in this instance over here, the question asks, accounting role of showing financial position is most critical to a creditor because it helps them determine as follows. So first and foremost, you got to imagine you are the creditor. You got to imagine that you are the supplier who provide goods and services to the company and the company owe you money. So where the head of a creditor, where the head of a supplier, what is your vested interest? Your vested interest is to be very concerned about the past year revenue figures of the company. Yes or no? The answer, of course, is no, right? That is never the case because the most critical to the creditor, wearing the head of a supplier or creditor, is to what? Always ask yourself this question. So, B, will he be interested about the efficiency of the marketing activity? No. It is not his vested interest. He wouldn't want to know, right? I mean, good to know, but he wouldn't want to know. It's not the most critical. C, the business ability to pay back what it owes. Owes to who? Owes to the creditor or the supplier. This seems to be the correct option, but let us confirm with D. D, whether the accountant is upholding ethical standard. Again, is that good to know, right? But it is not of his vested interest to know. And therefore, it is of his vested interest to know as far as C is concerned because he will want to know. I provide goods and services to you. When credit term is due, let's say I give you 1 month credit term as a supplier, as a seller, I give you 1 month credit term. Are you able to pay me back? So that is his primary number 1 concern. So answer will be C. Question 9. For question 9. Under LO3, it is asking which functions of an accountant involve interpreting financial result, identifying trend, and providing insight to management. So we have 4 options. Option number 1, recording and maintaining financial data. This one is more like a on-start, those primary process, right? The process at the very beginning of the whole entire accounting processes. So it is not so much of an interpreting, identifying trend, which represent the later portion of the accounting process. So with that in mind, A is wrong. B, ensuring compliances with the law and accounting standard. Of course, we know that this is not part of the core processes of accounting. This is the after process whereby with all this information, you ensure that you are on the right track as far as compliances imposed by the government are concerned. C talk about providing analysis and interpretation. This seems to align with the description of the question, right? So let us confirm with D. D, preparing financial statement. So again is that D, which is the on-start process of the accounting spectrum, does not fit in terms of the best representation. And therefore, answer will be C. Providing analysis and interpretation is the best fit in terms of illustrating the function of the accountant that involve interpreting, identifying, and providing insight to the management. So answer is C. We comes to the last question, question number 10 under LO3. Accountants add values. Accountants add values to a business mainly by providing or offering personal opinions about product. Answer is no, right? That is not his value proposition. B, providing ethical, accurate financial information. Information that is objective, information that is being supported by supporting documentations. So B seems to be the correct answer. But let us look at C. C, promoting advertisement, right? So once again, this is no because that is under the review of the sales and marketing team. Last but not least, avoiding professional standard. So this go against the ethical values of an accountant, right? So this is totally out totally out. So therefore, B is the correct answer. Providing ethical, accurate financial information for decision making. Answer will be B in this instance over here. We have come to the end of chapter 1, part 1, whereby we cover LO1, we cover LO2, and LO3. So within a nutshell, for LO1, we talk about the boundaries, right? The business as a whole, of which accounting is a subset, and therefore establishing the relationship between business activity and accounting as a whole. For LO2, we talk about the purpose of accounting, preparing financial statement for the stakeholders to be able to use for their decision making. In specific, there's these acronyms that we use that stand for IRCSI, where I is about identifying, R is about recording, C is about classification, S is about summarizing, and last but not least, I, interpreting. So as a whole, this is the takeaway as far as the accounting process is concerned, which is important for us to be able to visualize it subsequently and apply when the other chapters unfold. And last but not least, we talk about the roles and responsibility of accountant. We being accountant, we are always perceived to be profession with moral high values, standing at moral high ground, and therefore stakeholders, whether internal or external stakeholder, they trusted us for their decision making. So that's first part of introductions to accounting. If you enjoyed this lesson and want to dive deeper into more accounting topics, come learn with us at A1 POA. You have taken the first step by watching this video. The next one, join A1 POA to level up your knowledge from 0 to A1. Master POA with confidence. Don't forget to like, share, and subscribe for more accounting tutorials. You can also reach us on WhatsApp. Details are flashed on your screen for enrollment information. This is Lawrence Paul from A1 POA. See you in the next lesson.